waiting to find out whether or not the interest rates are going to go up or they're going to stay down. Well, to talk more about this, we join now by economist Peter Worthington, who represents Absa Capital, live from our Cape Town studios. Peter, good morning. What is your call on this? Are we going to see interest rates going up, or will Jill Marcus keep them the same?
This is a super interesting MPC meeting because there's such a high degree of uncertainty attached to it. And as you'll recall from the last one, the entire universe of economists got the call wrong by expecting no change, and then the Reserve Bank implemented a 50 basis point hike. For this afternoon, economists such as myself are of a much more greater dispersion of views. Some of us think that the SARB is going to stay on hold. Others are calling for a 25 basis point hike, and others, like ourselves, are calling for a 50 basis point hike. But I would say that there's a fair degree of uncertainty around this particular decision. I wouldn't be surprised if the SARB stays on hold, because since the January MPC, we've seen a couple of things. Firstly, the Rand has traded surprisingly strongly in the wake of that last MPC meeting. And secondly, we've had a couple of consumer price inflation prints that still show very little evidence of pass-through from previous Rand depreciation to the level of consumer price inflation. So those two things are a dovish input to the SARB's rate decision, but of course they do look at a much broader range of factors than just those two variables. But we're calling for 50 basis points, but as I say, it could be 25 and it could be 0, and I wouldn't be terribly surprised.
Yeah, because the Rand stabilized so well, for instance, let's just focus on that for a short while. After the last 50 basis point, wouldn't it be good for the currency again to see another rate cut? I mean, another rate increase?
Well, that depends on how you approach it. I mean, interest rate movements can be both positive or negative for currencies depending on what else is going on in the markets and how the market perceives the rationale for the rate move. In general, from a perspective of interest rate differentials, higher interest rates attract more capital inflow and are generally seen to be supportive for the currency. But if you look to, let's say, a hike in the middle of what is perceived to be a crisis, that can actually spark further pressure on the currency. It's ambiguous, the effect.
Yeah, it's not a nice position, an easy position for Jill Marcus. Economic growth is not there at the moment. Inflation is just touching below that 6% target.
It is. They are really between a rock and a hard place, stagflationary situation. Unfortunately, the big constraints on growth have very little to do with the level of interest rates. They're more about supply-side constraints, things like the platinum sector strike, insufficient capacity at ports and rail networks. So those things are really playing out in a big way to work to lower growth, and she cannot fix that with an interest rate movement. But as you noted, inflation is on the rise, and although we are still within the target range, that is unlikely to remain so. It was the forecast that the headline CPI inflation rate would breach the target range and stay up there for a number of quarters that motivated the SARB to hike last time around. And from our point of view at Absa, we think that breach is going to occur in May, and we will not see headline CPI inflation back down within target range until 2015.
Consumers are not in a good place either, Peter. I mean, interest rates go up, it costs more to pay your debt, and we're also waiting to hear this morning by how much petrol will be going up next week. I mean, as we know, Minister of Finance Pravin Gordhan did announce in his budget speech in February that the levy, the fuel tax, will also be increasing from April. So from a consumer perspective, these are not easy times, especially if Jill Marcus increases the repo rate this afternoon.
I think this is true, and you can see it in measures of consumer confidence, which are really actually quite pessimistic at the moment. One possible bright spot on the horizon, however, is that the recent data on job creation, whether taken from the quarterly labor force survey or most recently the quarterly employment statistics, which is an enterprise-based survey of payrolls rather than the labor force survey, which is a survey from households. But at any rate, both of those in the very recent period have shown better performance on job creation than we may have expected or that we may be used to thinking about in the South African context. I think it's too early to draw definitive conclusions about it, but it is a little bit of a hopeful sign. And as regards to the petrol price, yes, we may have the increase in excise taxes coming through, but fortunately, at least in this month, we have had an over-recovery of price relative to where the underlying exchange rate and international crude oil prices are. So with that part alone, just on that part alone, I would have expected a petrol price cut of about 14 cents a litre.
Okay, well, hopefully it happens, Peter. Thank you very much. That's economist Peter Worthington from Absa Capital.
Know more about your world.
eNCA.com.